Hi, everyone. Today, let's talk about Jamie Dimon's opinion on the banking crisis and potential repercussions for years to come. Then we'll go over the economic calendar for today and tomorrow. Then we'll go over the Fed futures. Then we'll go over the charts. And then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jamie Dimon wrote his annual letter, and in it he said the banking crisis is not over and the repercussions will be felt for years to come. Jamie Dimon, the CEO of JP Chase, has been in that position for a very long time, and generally anytime he says things, people pay attention. And interestingly here, he does highlight that these events are nothing like 2008 in an attempt to reassure investors despite his explosive comments in the opening. He says, as I write this letter, the crisis is not over yet, and that it will be felt for years to come. They mentioned that JP Chase stepped in with about $30 billion for First Republic, another regional bank that was potentially going to go under. At least there were fears that it was going to. He also mentions that big banks did see larger inflows as people moved away from smaller institutions, but that this was not good for anyone. Then he goes on to talk about regulatory changes. Anytime there's a crisis like this, there's regulatory systems that get put in place, just like we did with the last iteration of banking crises. He expects this to be no different from that in terms of regulation additions, but it's important to note this does not absolve bank management. Obviously, the banks in question here did make some bad decisions at a bad time, and then the bank runs obviously made that problem much more aggressive, and they weren't able to cope with all of these stresses at the same time. He said he thinks regulation should be less academic and more collaborative with policymakers, but this is always a risk for big financial institutions. Sure, they're too big to fail, so the Fed continues to backstop them, but they're also heavily regulated in terms of what they can do with their money, because in the same vein as them being too big to fail, we don't want to pump too much money into them, and we're hopefully preventing banks from being in that kind of a situation in the first place. And to close out the letter, he mentions that 2022 was a difficult year for markets and for the global economy, but that JP Chase did surprisingly well. The stock only fell 15% and generated $37 billion in net income. Moving over to the economic calendar here, highlighting Australia. Royal Bank of Australia interest rate decision was today, and they decided to pause. The forecast was a pause, and they in fact did pause. And it's interesting to note that the Royal Bank of Australia did raise their rates before the Fed. And if the Fed follows in their footsteps, that would definitely be interesting. So looking at our first pause here from a major state bank, and the question is that going to lead the rest of the banks around the world to include the Fed and the European Central Bank? Otherwise, moving over to reports for the day, you can see factory orders were down 0.7%, more than expectations. The previous iteration was revised down from negative 1.6 to negative 2.1, so more economic weakness here in factory orders. Similarly, factory orders ex-transport revised down from 1.2 to 0.8, and then the expectation was minus 0.8 here, but we actually got 0.3, so slightly better than expectations for this month, but the previous month was revised down. And similarly here with the JOLTS report, you can see 10,563,000 was the previous read, which actually was revised down from 10,824,000, and then the current read here, 9,931,000, down from the 10,400,000 expected, so much lower than expectations. And the big question is, does this cause the Fed to pause? And then tomorrow we have non-farm payrolls, and if they come in worse than expected, it seems like all things are pointing to a pause in the May meeting. And moving over to tomorrow's calendar, you can see non-farm payrolls here, 8:15 Eastern. And then later in the day, we do have ISM non-manufacturing PMI, always interesting at 10 o'clock. And then crude oil inventories here at 10:30. Usually this doesn't do much, but it might be a little bit more relevant here with the OPEC cuts. So keep an eye on these in the afternoon, but the big one is non-farm payrolls. And like I said, if that comes in light and all this data is pointing to a weaker economy, maybe that points to a bigger percent chance of a pause in May. Moving over to the Fed futures, you can see we're still 4 weeks away, 4 weeks in a day. Looking at the May futures, you can see we're actually 55% leaning towards a pause at this point. That is up from 40%, so things are moving in that direction. Definitely interesting to see. Nothing has really changed here in June. Makes sense. Things are kind of static. We haven't gotten any major reports one way or the other, but the JOLTS report coming in light and the PCE data coming in light before that is certainly starting to point in the direction of a potential pause. Moving over to the charts here, starting off with the S&P 500 here on the hour and the daily chart. We've come in, we created a little bit of a top with the gap up here. We made a new low on the day versus yesterday's low. You can see testing that longer term support level here on the daily chart, found support there, and then we're looking to rally into tomorrow's session. Did look like we found support into the close. And I have this structure on here, something I'm looking for. And basically it's saying that we could get another update, maybe retest yesterday's highs. But right now I'm neutral here on the S&Ps, and I think we're probably going to go sideways and eventually break down. Certainly have some levels to get to on the downside. Need to get below this 406.95 level right at this trend support. And then below that, we actually don't have a ton of support until we get down to 399.25. 404 was also a level that we were watching on the rally up here. So definitely could be an area to watch. Turning on volume here, you can see that area 403.65 to 404 was the next area of highest volume. But right now, this is the structure I'm looking for, and I'm neutral here going into tomorrow's session. Momentum turning slightly bullish on the hourly, stuck at the 50 level on RSI, but daily momentum did get a step down here today as well as RSI. So if this does follow through here to the SMA, that would point to a little bit more downside going into tomorrow's session. Obviously, non-farm payrolls in the morning are going to dictate direction, but that's what it looks like right now. Moving over here to the NASDAQ on the 3-minute and the hourly. I just want to highlight the 3-minute here because you can see consistent lower highs. And then right at the end of the day, we made this new low and then we rallied right up to this previous consolidation level. Big push here at the end of day. Lots of volume. Definitely interesting. Something to watch going into tomorrow's session. I think we'll probably get a little bit of a pickup into the early morning. We'll see what happens with non-farm payrolls. Certainly could extinguish this rally and get a kickback to the downside. But right now, slight bullishness into the close. Same thing here on the hourly, moving in the bullish direction for momentum. But overall, we're downtrending in terms of strength. You can see the EMAs moving lower. RSI right at the 50 level, moving lower here, especially when you compare it to the highs that we had here. Those were your peak RSIs. This most recent high was a lower RSI read, and we're moving down here. Definite divergence on the hourly chart. Looks like we're going lower. But do keep an eye on these rallies here at the end of the day. It's definitely interesting to see. Went from just below 318 all the way to above 319 just in the last few minutes of the day. Moving over to the Russell here and the Dow. On the 4-hour chart, you can see that Russell had a big red bar here on the news today. JOLTS report pushing markets down. And then we found support at the trend line, 174.38, as well as the 55 EMA here on the 4-hour chart. Looks like we're holding up the markets at that level. Certainly looks like we could see a pop back up to resistance in tomorrow's session, right around 177.32. That would be interesting. But right now, this looks quite a bit more bearish than it has here recently. We had a grind up, big move down. Sometimes you see a little bit of a retrace after that bigger move, and then we get the continuation to the downside. That's usually what I expect to see. Similarly here on the Dow, grind up, big move down, took out all of yesterday, and then we got a little bit of a rally into the close. So keep an eye on that, same as the NASDAQ. But again, usually when you have a big red bar after a grind up, this does start to roll over here in the medium term. Overall, momentums both bearish, RSIs both bearish going into tomorrow's session. Moving over to Apple and Tesla here on the daily chart for Apple, you can see we moved up higher, got very close to testing that resistance. We didn't quite get there. The high of day was 166.84. Looking at 167 as the high that I was looking for. And then we sold off a little bit and ended up slightly red on the day. Momentum stepped down. We got into overbought conditions on Friday's candle, and then we stepped down here slightly today. So moving in the slight bearish direction. Obviously, this trend is extremely bullish and you have to pay attention to that. But we're definitely extended here, and it's worth watching going into tomorrow's session. If the biggest stock in the world is no longer bullish, that obviously is going to have an impact, especially when it's been so extremely bullish going back to early January all the way until today. So keep an eye on this one. Going forward, still bullish, but does have some slight elements of weakness going into tomorrow's session. Tesla, on the other hand, continues its downward trend. Tested the 55 EMA here on the 4-hour chart. Got very close to the 200 SMA. We're below the 193.50 level, so this is starting to look more and more bearish. Had a new lower high, new lower low. Definitely looks like that's going to continue. Area of highest volume sitting at 195.74. Come up, retest this zone potentially tomorrow. Then I would expect this to push down into the 188.50 level. Of course, 200 SMA sitting at 189.47, so watch that as well. But usually the deeper level is the level that you end up hitting. Overall, momentum bearish, RSI bearish, below the 50 level here on Tesla. Moving over here to Amazon and Microsoft just for a moment. You can see Amazon continues to look strong, had a new high here, looking powerful. Momentum still bullish, RSI still bullish. So keep an eye on Amazon. It's actually one of the strongest looking big tech stocks. Amazon and Apple still looking pretty strong. Amazon looking stronger than Apple here today, which is unusual. Otherwise, Microsoft, you can see we had a high on Friday, made a midpoint, then we had a slightly higher high just for a moment. Then we ended up selling off and filling the gap. Then it's a little bit weak after hours here. Certainly looks like we could come back down and retest the 21 EMA here on the 4-hour chart, down around 283.91. Looks kind of weak. Couple of points of downside potential. That would put us in the same zone as the low from yesterday. So watch this on Microsoft. If Microsoft and Apple are both moving lower, at least in the short term, that's probably going to pull down the major indices along with them. Moving over to consumer staples versus consumer discretionary. Here you can see staples took a little bit of a pause, hit the 75.40 level, which was basically the high of this previous consolidation. I was looking more towards these highs at 76. We didn't quite get there, certainly still could get there. But right now, this is where we're at, looking to see if we can get above this level and push to 77.50. If not, probably going to break back down to 74. Right now, momentum did take a slight step down, and so did RSI, so it might take a little bit of a breather after the relentless rally that we've had here on staples. Certainly a possibility. Come back, retest the SMA, then get the continuation on RSI. Looking at discretionary here, another inside day, definitely looks weak. You can see we're in this area that I was watching, so we certainly could go either direction from here. 147 is your support. If we get below that, we're probably going back down to 141 in that area. If we can stay above this, we'll probably drift towards 153.90. Right in this mid zone, certainly could go either way here on discretionary, but similarly to staples, momentum stepped down, RSI stepped down, looking for that retest around the SMA here on RSI. Moving over to energy and healthcare, you can see energy holding this area early in the session and then sold off, came down right to the support level that we talked about and then rallied here slightly, still below the 200 SMA, so still slightly bearish. Looking to see if we get below this 84.56 level, and we have 83.55 below that, and then there's a lot of room down before we hit 80.63. You can see no volume in this area. Next volume is down around $82, and then the next one right around that next support here at 80.60. Certainly looks like this could sell off here a little bit in tomorrow's session, but it'll be interesting to see what we get after the crude levels. Otherwise, moving over to healthcare here, you can see a big wick rejection at the level that we were watching, 131.23. Tested that level once again here on the second candle, and then got an indecision, and it looks like this is most likely going to move lower. Momentum stepping down, RSI stepping down, still overbought here in terms of conditions, and seems like we're about ready to get that bigger pullback. Moving over to transports, broke down here today pretty clearly. We had the candle of indecision yesterday on the daily chart, big red day here today, just like we thought we might get. Came down, tested that area of highest volume and stopped right there on the spot. Looking to see if we get a bit of a bounce from this area up to maybe 224.59, 224.70. That would be interesting. But right now you have to expect that this is going to sell off. Daily chart stepping down. Hourly still has a little bit of momentum. Maybe we push back up into the zone, retest VWAP. That would be interesting. But either way, this looks weak here on transports and it's probably going to continue to sell off over the next few days. Moving over to semis here just for a moment. Similar thesis. Gap down, fill the gap, and then move back down to support here at 257.14. If we can hold up this level, maybe we see another push up. Momentum bearish, RSI bearish. Definitely looks weak going into tomorrow's session. You can see that daily chart. We had the indecision yesterday and then the big red day here today. You would expect that this is going to continue. Maybe we come down to the 21 EMA at 250.80. That would be a pretty big move from here. That's also where VWAP is sitting. And then below that, we have 284.10. And then below that, we have the 55 EMA at 244.67. And then the major trend line here. Currently, it's sitting at around 240.59. But over the time that it takes us to get there, it'll probably be closer to this 245, 246 zone. Overall, looks short-term bearish, but I'm sure it'll find some buyers here in this area that I pointed out. If we do break below those levels and we can get below this midpoint, then we start to make lower lows, look for that lower high, and then maybe a continuation down to 222. Certainly a possibility, can't ignore it here, but this is still a very bullish structure, and we continue to make higher highs and higher lows. Moving over to yields just for a moment, continues to sell off here like we thought that it might. And this is pricing in the fact that I think we're going to get a pause here in May. So everything is starting to point towards a pause. Bank of Australia, all of the reports have pointed towards a pause. And it seems like yields are starting to price that in at least a little bit here in the short term. Moving over to stocks above their 20-day and 50-day averages here, you can see we had a big move down compared to what we've been seeing. So definitely showing some weakness here, especially on the 20-day, got into overbought conditions. Now we're selling off, momentum stepping down. Similarly here on the 50-day, down step on momentum, RSI moving lower. We were in an area of resistance, hit that 52.81 level, spot on. Now we're selling off down to the 40 level. If we get below 40, then we should look down to this 28.30 level, which would be a pretty substantial sell-off. Overall, these charts are pointing to a little bit more downside, at least in the short term. Moving over to the dollar here on the 4-hour and the daily chart, you can see we did break the trend line. We've been holding this area for a while. We made a new lower low, looking at that 101.25 level for potential support. Zooming out here on the daily chart, you can see that's right at the lows from this previous consolidation before we made that new low and then rallied pretty powerfully over the next couple of weeks. But now we're definitely falling off. This is a clear trend on the daily chart, staying below the 9 EMA. And the question is, do we break this 101.25? Do we break this most recent low at 187? That would be interesting. If we start to get into these lows, then we'll look at potential lower lows, see where we might end up. But right now, everything is bearish. Momentum, bearish. RSI, bearish. Got into oversold conditions here on the 4-hour chart. Might see a slight retracement, but overall, I would expect this to continue to the downside. Moving over to junk here on the hour and the daily chart. High yield bonds showing weakness. Talked about this yesterday. We didn't get below yesterday's low. We did close at the low, which is definitely weaker than yesterday. Momentum, bearish. RSI stepping in bearish territory. Volume here was a step up from yesterday, and it was bearish. So keep an eye on this. Definitely looks weak. Not as weak as transports, but definitely weaker than it was yesterday. And if this starts to break below where we are basically right now at $92, then we should expect to come down to at least 90.40 at the 55 EMA on the hourly chart. And if that does happen, then we should expect growth in the NASDAQ to move down along with it. Moving over to TLT here just for a moment. It continues to do what it looks like it's going to do. Rallied again here today. Did gap down, did fill the gap, did make a new high. And like I said, we were going to find some resistance in these previous highs, which we did. Still looks like we're going to move above these levels, and that's what I do expect in the short term. But right now, obviously, we're trapped at these highs, looking to get above that 108 level. If we can get above there, then we're looking to this previous high up around 109. And then above there, my price targets are around 110 to 115. So looks bullish, TLT, looking like it's setting up for a pretty strong rally here in the short to medium term. Moving over to the VIX here to finish up the charts, you can see we got above this trend yesterday and then sold off right to support. Again, rallied up, slightly higher high. Looks like we might make a slightly higher low here. And if that does happen and we start to see a push, that would make sense. Start to see some lower lows in the markets and higher highs here in the VIX. Overall, this was a descending wedge, and it seems like ready to break out and start to push up to this 21 level, then maybe 2250 over the next couple of days. Right now, the VIX is looking like it's setting up to go higher here, which correlates with my downward thesis on markets. Moving over to my positions here, you can see I ended up losing a little bit of money today. I was on a bit of a winning streak, so it's bound to happen here. But let's see the positions that I ended up taking, right? So IWM ended up closing much below my 177 strike for tomorrow. I took this position off pretty early in the day and rolled down to the 174, which is in a small loser right now, 174 for 37 cents. So I have a little bit more than $1 of downside protection. Does look okay going into tomorrow's session. We'll see what happens. If it looks good, I might hold on to it. If not, I might roll down. We'll see what happens. Otherwise, looking at the Qs, you can see I had a 114 put, which I allowed to go to expiration. I ended up picking a 315 put here for tomorrow for 45 cents. And then I have two 321 calls for tomorrow as well. In a small profit here already. I'm going to start keeping calls on the books because I do think some downside is possible. So I do want to protect myself from that at least a little bit. And then I have a 315 put here for 75 cents going out to the 6th. Still neutral on the NASDAQ until we start to see some major downtrends. But I do think that that is possible. And then my XLE position here, basically in a holding pattern, deep in the money on this covered call, waiting to see what happens when we get to Thursday. In terms of my thesis, like I said, I am neutral on the NASDAQ. It's certainly showing some signs where it could be looking to roll over, so keep that in mind, but it hasn't done it quite yet, so we're still holding a neutral position and a slightly bullish position here on the IWM, just because we're in an area of much more support compared to the NASDAQ. Let me know down in the comments section what you think of Jamie Dimon's comments, and are all of these reports saying that we're going to get a pause in May? Certainly seems like the data is pointing in that direction. Jerome Powell has mentioned he's very much about the data. Otherwise, if you got any value out of this video, make sure you like and subscribe, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.